With regards to what the central bank here will do and what the fiscal response really is going to be, I mean, you think, any forecasts really in that sense?
Well, we think 2 rate cuts, one likely this week and one in the second half of the year. And again, that's remarkable at a time when the Federal Reserve is not able to cut interest rates because of the initial stagflationary impact of the tariff and trade issues. So it is exciting to see lower short-term and long-term rates in India. That's very supportive of equities.
You know, this is sort of pull back a little bit since we've talked about the micros. You said for investors, a lot of political risk exposure, etc., all that also has started to matter a lot more. And there is a lot happening. So what are the 1 or 2 big themes which come up in conversations with big global clients? And, you know, in the context of India, we always hear it's actually better placed than most in that sense. I mean, it's not really, there is this strategic competition between the US and China. Here in India, we kind of sort of, you know, we've been working with pretty much everyone in that sense. What is your sense, Jonathan?
Well, we're certainly in an era of hegemonic rivalry between the US and China, and our overall framework is what we call multipolar world dynamics, which we first wrote a Morgan Stanley blue paper on as long ago as 2018. So we've been talking about this for quite some time. And we did identify in that original blue paper India as particularly advantaged just simply because of its size and its history and its ability to forge relationships in this complex world with the other large powers. Now, that isn't always without tensions, and there are certain issues that can arise, particularly, let's say, vis-à-vis Russia, for instance. But those can be negotiated or dealt with as India deals with its relationship, particularly with the US and China, and that's what we're actually seeing. Whereas for some other geographies, some smaller geographies, they have basically been forced more or less by these developments to move decisively into one camp or the other, which reduces their optionality. So we would still emphasize, and did in our original work, that India is quite advantaged in this regard.
And it's played out like that, essentially.
Yes.
Since then, back in 2018 and what you've seen so far.
Yes, it has. I mean, one of the ways that you can sort of see that is that if you look at, say, FDI flows or private equity flows into India, they are very, very buoyant, and they come from, across the planet. They're not just coming from the United States. So I think this perception that we have is actually shared by many investors as they commit long-term capital.
And what is the sense about this shift away from, especially on the manufacturing FDI side, global MNCs setting up shop, factories building here in India? What is your feedback on that? Is that process underway? Because some say during Trump 1.0 countries, smaller countries like Vietnam, Cambodia, etc., benefited. A lot of the shift did not happen towards India. Maybe it'll happen this time. At least that's the hope. What are you picking up?
Well, if you look at the supply chain in smartphones or other areas of technology, it's certainly moved at some pace towards India. You're right that if you look at Vietnam in particular, it's had significant success. But India has probably outperformed some other geographies that have relatively low wages, for example, Indonesia, in attracting inward FDI. And certainly it's proceeding at some considerable pace.
Fair enough. And this shift will continue to happen over the coming, and that's the bet that many are making here.
Yes, and I think one thing that's important is, having seen this shift earlier in my career in relation to inward investment in China, which continually surprised on the upside, the reason that this is happening is not just for export, let's say, back to the US or Europe. It's to actually service the local market. And the local market, if your GDP, when we started this interview, is growing at 7.4%, that is highly attractive. So you have to have plant here at scale to service the urbanizing middle class, just as you did in China 20 or 25 years ago.
So it's not just a factory to the world, but it's essentially the large local market as well, which is the attractive.
Yes, and by setting up locally, if you're an inward FDI multinational, you'll inevitably get to learn more about local market, local tastes, and what the consumer wants, or how you can actually develop your supply chain, and all of those sorts of things that was going on in the southern part of China or around Shanghai in the past.
A slightly near-term question. India was said to be one of the first in line to get a deal with the US, and I think various officials, including President Trump, have spoken about it. Not got there yet. You think it's going to take time? It's delayed for some. I mean, what's your reading of the situation?
Funnily enough, as I was just getting up and having breakfast this morning, Commerce Secretary Howard Lutnick was actually talking about the deal with India being relatively imminent.
Yes.
And we would still anticipate that India would be one of the first countries where there will be at least an outline deal done.
And an actual one, of course, takes a lot longer. A proper deal, I mean.
Well, if you look at
an agreement and then, of course, a deal later.
Yes, if you look at the United Kingdom, which has done an outline deal, that's sort of what we're talking about here.
Do you have an assessment of where the tariffs in the US, by the end of all of this sort of, upheaval, up and down and pull, back and forth, is going to settle at? When President Trump came in, I think average tariffs are about 2.5%
yes.
to 3%. They're significantly north of 10% now. Where do you think we will be by the end of this year, according to you?
Well, not lower than 10%. I mean, this is part of industrial policy in the United States, and it also raises tax revenue. So it has those two planks that underpin the philosophy here. We think for most countries, it's going to be sort of lower than where we obviously got at the peak of the post, like, Independence Day announcements. But for China, it'll probably be materially higher than for the average country. So this hegemonic rivalry between the US and China will result in higher tariffs that both will have on each other by the end of the year. Whereas for India, we would expect it to be relatively low.
But average, at least 10%.
I would say at least 10%, not back to
China,
the number of
north of 30%, or
we have it at the moment running around about on a weighted basis across all the product lines. It's about 45%. It might end up somewhat lower than that, but maybe not materially lower than that.
What are the big risks, Jonathan, that you think about, which can sort of which can derail some of this?
Ultimately, we're investing in a multipolar world environment, which is inherently complex and risky, as we see. But again, I want to emphasize that point about volatility. I mean, we've had exceptional volatility again in markets this year. But India is not at the heart of all of this. India can get on with its own business and do very well economically and as a market.
I got that. So, Russia, Ukraine, for example, any thoughts on this recent escalation?
I can't comment on that.
Okay, fair enough. I mean, I think we've seen some developments over the weekend, but things to watch. It's a war which has gone on for 3 years with little impact, probably from a market standpoint. But we will maybe pick up on this later. Jonathan, we'll leave it there. Great conversation as always.
Thank you.
Thank you very much for doing this. Really appreciate it.
Yeah, great to be here in India. Thanks for having me.
Good luck with the conference.